Are you tired of losing deal after deal, even when you offer top dollar? In today's cutthroat multifamily market, price alone won't cut it. Stick around because we're pulling back the curtain on how we craft bulletproof offers that sellers choose every single time. If you want to stop guessing and start closing, this video is for you. Now, if you are interested in investing in our next deal, make sure that you check out fariscapitalpartners.com and you book a call to get on our reservation list. There are limited spots as deals come up, and you want to make sure that you get attention and you get on top of that to make sure that you are informed when that next deal comes along. John, it's great to be here with you.
So good to be here, Mark. This is one I've been looking forward to. You and I have either personally or kind of trained agents to close tens of thousands of deals. I mean, north of 50,000. So something we're pretty well versed in. But as in Faris Capital Partners first got started, we were in a time where deal flow was very limited, and so good deals had a lot of attention, often 40, sometimes 60 offers. And so how did we win? It was through these strategies we're about to outline. It was really, building great relationships with brokers. But at the end of the day, what's most important is what the seller thinks, right? And so structuring a deal right out of the gate that the seller can look at and feel comfortable with and excited about is critical to success. So yeah, really looking forward to today's topic.
Yeah, it's really interesting. You would think that price is always the most important thing. But, this is something that I learned early on my real estate career is that it really wasn't. There were many times that we won deals through the years where the agent said, listen, you're not the top offer in regards to price, but you had X in the offer or you had Y in the offer. And so that's what we're going to really break down. What are those other, X and Y's and Z's and A and B? And we're going to talk all about the different, we'll say, value adds that you can make sure to include in an offer, and then how to actually get that information to be able to structure your offers properly.
Yeah, it really comes down to certainty in a lot of ways, right? And it's hard to put a dollar on certainty, but at the end of the day, there's a lot of money that a seller would put on that certainty. So when the deal's structured in the right way and it gives them that confidence that you're going to close and that you're going to make it an easy process, that's worth a lot. And I think that's where you're able to sometimes win where you're not the top offer, right, in terms of sales price there. So, yeah, where does that look like? It's terms. I would say terms are critical when it comes to how do you structure your offer, and it's something that is kind of simple if you really slow down and pump the brakes and, in a sense, practice empathy. Put yourself in the shoes of the seller, and even take the time to ask the seller, often through the broker, of course, but what is important to them, and then addressing those things in the contract, right?
For sure. If we were to back the wagon up a little bit before we even get to like the terms, it's, you had mentioned it, empathy and building a relationship with the broker. So through the years, I don't know how many times I would just, I'd wake up and all of a sudden there was this offer sitting in my email box. It's like, oh, interesting. There's an offer that came in. What's going on? And a lot of times I haven't even spoken to the other agent.
Yeah.
And so the offer comes in and they just structure the offer. They're assuming everything about what this is important to the seller, what's important to me as a broker. And there was no conversation. And I can tell you those agents and those buyers that were being represented by those agents, they were at a major, major disadvantage. Now, as a listing agent on my end, I was always the one, because I'm trying to do the best job for my seller, and the seller is going to ask me questions about the buyer. So I would always proactively call back that buyer's agent and find out, what's important to them. And I would do my job on the other side. But when you're going into these larger multifamily deals, generally you're going to have one broker. You're going to have one broker that's going to be looking after both sides. And so how you handle that, we'll say the relationship with that broker at the beginning, is going to be really important. And to get a really good understanding, first and foremost, what is important to the seller? That first question is so, so important. Tell me what's important to the seller. And it really starts with, why are they selling? A lot of times you won't get the exact reason why they're selling, but it's like, what's the goal with the sale? And a lot of times they're like, they like to redeploy it in, another project, or they like to be able to get it sold by this date, right? Goes back to your terms. Or it's like, what? Price is really most important. They don't really have any sort of timeline with that. But unless you start asking some of these questions, then you're not going to get it. And not only that, it's just building rapport first. You had mentioned that. Why don't you talk a little bit about how we've built rapport with brokers
Yeah.
before even submitting an offer, before even talking terms with them?
Yeah.
How do we approach that, John?
Well, it's really starts really early in the process, even frankly before we're looking at a deal, right? So when we enter a new market, we practice, lessons taught in the book Giftology, and we send a welcome gift where we're saying, "Hey, we're new to the market. Here's our buy box," but we include a little something, sometimes a Yeti mug or some chocolates, candy, maybe a nice book. And it just is an attention grabber. And often what would happen is before we had an opportunity to call them, they would call us to say, "Hey, we got your gift, got your buy box. You're now been added to our list." And then we just stay in touch, right? So Joe Lowry, who's our senior VP of acquisitions, has a metric every day to call a minimum of 10 brokers a day. He's often exceeding that, but that's his minimum goal. And, not only is he asking them what deals they have, but they're talking shop, they're communicating around what's happening in the marketplace, what we're seeing, what we're experiencing, maybe filling them in on a deal we had done previously to sort of illustrate the kind of deals we want. But while we're doing that, we're sharing some intel. And, it's just all about a reciprocal relationship where we're both adding value to each other. So we really start there. And then, when we get to that point where we're considering a potential property, when we're walking the property, we make sure we show up on time. If we have a 2:30 appointment, we're there 15 minutes early, right? So the broker's not sitting around waiting for us, which, that little thing can make a big impact down the line, right? Inconveniencing them. We ask thoughtful questions, we get to know them a little bit on a personal level. And while you're doing that tour, Mark, you can uncover so much, right? So we were recently touring an asset, and we learned that the seller, is motivated to sell because they're trying to get a new development deal done in another state, and they need the proceeds from this sale to make that happen. So there's a little bit of motivation there. And, that kind of communicates to me time is going to be important. Now, once we get to the point where we like the deal and we're actually going to submit that LOI, we have a more direct conversation with that broker saying, "Hey, I heard this. Is it safe to assume timing is important?" So a quick closing. And you might find out, no, that's actually not. Yeah, they are motivated, but they actually need X to get out of the deal in order to make this deal work, right? So it's multiple times throughout the process, sort of touring the deal, touring the deal, and then post. Now, if this is in a residential context, it may be you're talking to them before you tour and then you go on the tour with your agent. But in commercial, it's typically with the seller's broker that we're walking the property with. So, it's sending a nice email after the tour, thanking them for their time and just reaffirming, is there anything else I should be aware of? We're definitely interested. We're going to be circling, getting our pencils out, sharpening our pencils, so to speak. Anything else I should know before we submit? And what you'll often find is then with that approach, they start becoming more proactive. And so, for example, we're looking at a deal now and the broker reaches out directly and said, "Hey, I just got the February financials. Would you like me to share those along?" So that wasn't updated to the deal room, right? It was just because we were in conversation. They knew we were interested and we were engaging with them. And so sometimes a little advantage like that may come your way that the other brokers didn't get just because, to your point, maybe they're just putting their LOI together and they're just shipping it off. So the broker relationship, particularly in commercial, is so critical. And even in residential, Mark, I mean, one thing I learned very early on in my career is the business gets very small over time, right? There's a lot of agents out there, but then very quickly you see they come and go. And the agents that stick around and that, are built to last just get smaller and smaller. And so over the years, you start doing multiple deals with the same broker, right? And that it just becomes easier and easier each time because you know each other's working style. So that's an area I think that if you're thinking of investing and doing these deals on your own, you need to really focus on those broker relationships and look for opportunities to not just ask for something, but to give something back in return, add some value to their lives, right?
Well, and this stuff works, right? Because the 144 unit we got in Charleston, that was completely off market. We got the phone call on Friday. We were told it's going on Wednesday. So we ended up flying out on the Monday. We put an LOI on the Tuesday. It was wrapped up by the end of the day.
Yeah.
And they were going to go on the open market on Wednesday. This is a 144 unit property. And so there was rapport building that was being done before that as well. And so, people want to do deals with people that they like.
Yeah.
And so that we talk a lot about through our real estate companies, we talk about building thick ice. And so You can imagine if you just call up a broker and say, "Hey, I'm looking for a great deal. Send me a great deal when you get it." And they're like, "Yeah, okay." That ice is like nothing. You're just walking out in the water. You're going to fall right through. But every time you connect with a broker and you add some value, as in when we do a showing, we'll follow up after the fact and we'll give them feedback proactively without them actually asking for it. We're building relationships with them, little thoughtful gifts. We're finding out what they like, what their kids' names, what they're like, what they like doing, and we're building a relationship with them, and we're showing them that we're pros. And so trust is such a big thing, and one of the biggest reasons, going back to certainty, why that's so important for brokers, because sellers are looking to their brokers to give guidance and counsel, and so trust is so important that you build up that ice nice and real thick, because when the broker is telling the seller, yeah, I think this is a really good one, they're putting their name on the line. If that deal does not close, especially when you're getting into the larger multifamily space, that could be hundreds of thousands of dollars of lost commission. And for a seller, if that deal does not come together and it falls back on market and they have to go back to the market, well, probably on that next deal, they're going to have to take less now, because the new buyer is going to say, well, why did that last deal fall apart? And it's like, they're kind of like old news. And so you have to get it right the first time. And so there's so much riding on the certainty of close that becomes, as you start to scale up into larger multifamily, becomes more and more of an issue. But building thick ice, that's something that's really important. And then the other item as well on how you can build thick ice is, along the way, you show that you are a pro. So when you're submitting an LOI, we're doing all of our research ahead of time in regards to what are hard insurance costs, right? What are our terms? And they're going to ask you, who's your insurance broker and what's the quote? What are the quotes that you're getting? And if they see that you're out to lunch, that's going to erode trust.
100%, Mark. I mean, gosh, with insurance, especially these days, there could be major variations in terms of what the owner's currently paying and what your quote will be. So if you just operate under the assumption you'll have a similar rate, and then find out a couple weeks in during due diligence that it's actually going to be $400 more a door, your returns are destroyed. And now you're talking about a retrade or canceling the deal. And guess what? That had nothing to do with the owner.
That's
or
right.
The broker. That was all on you. And now you made it their problem, right?
Even like property management. I mean, yeah, who's your property manager, and what kind of rents are you looking to charge? Like, what do you have in your underwriting? You got to be ready with those, and you got to be prepared to back it up. Because if they ask you, because we'll talk as well about when we get into the preliminary phone call, and then we get into best and final, and then we have the buyer interview. When they ask you, you better be prepared with a good answer. Otherwise, if you're a little bit wishy-washy on your answer, you're not going to get it, right? Yeah. So it could be property management is another example of that, or your rents.
Right. No, absolutely. And I'm going to just back up a little bit, because you said something earlier that really just kind of made me have this thought. When it comes to these broker relationships too, Mark, when we're walking the deal, like I always have a notebook with me and I'm writing down information about the property. It's just a habit I've gotten into. Often I don't really have to go back to refer to the notes, but it helps me remember. But I'm also writing down when the broker mentions that they have kids or what part of town they live in. And, when I'm talking to them 6 months later or 3 months later or a couple days later, hey, how was that soccer tournament this past weekend? Or, for example, I discovered when we were meeting with one broker, we had some commonality in terms of the music we like. And it's like, concerts coming up that I know he'll be at. So I can just send him a quick text. Hey, did you see so-and-so's coming through town? And, it's just those little things that add up. But, back to your point there, having that plan firmly in place, so there's not one question they could ask that you don't know the answer to, is the only way you're going to build confidence, especially if it's a newer relationship with that broker. Over the years, you might do a couple of deals and they just know, oh, Faris Capital, they got it dialed in. But that's not going to stop us from still communicating that information. And we're going to get into some strategies here on how you can actually be proactive. And one of the recommendations we have, and what we do 100% of the time, is include a cover letter with our LOI, clearly articulating who we are, what our business plan is, who our insurance broker is, who our property
No,
management company is.
no spelling errors.
No spelling errors. We include these people's phone numbers and email addresses. I don't know that anybody's ever reached out, but we do it proactively. So there's just, if there's a question, they can solve that question. They don't even have to call us. And so those things are just little strategies that, even as an individual investor, if you're thinking about buying a single family rental, as an example, use that strategy. Just let them know you have a plan. Let them know you have your financing lined up, proof of funds, etc. It just goes such a long way, because ultimately most people aren't doing that. And if you've got 40 offers and you're trying to figure out, how do I filter these down into the top 4 or 5 to go to best and final, that may be the difference, even beyond your purchase price, that gets you to that next stage, right? Because you go, well, these guys have their act together. Offers a little bit lower, but I want to see where they come in best and final, right?
Yeah,
So
for sure. And how you present it as well. Like, what's the presentation look like? Like, making sure that from a branding standpoint, that you have your logo, that it's centered correctly, like that it looks tight, that your paragraph styles look good, that you don't have a 50-page LOI, like you have it tighter so that you make it easier for them. So you're not using 10 pages of legal jargon when you can do it in 2 paragraphs. Like, to simplify as much as possible, you want to make it easier for them, is really, really important. And so that's where, when you're submitting your LOI, not only that, what we'll do is we'll actually include references of previous brokers that we closed deals on. And, John, that's been significant. It's like, okay, don't just take our word for it. You can call, here are these brokers, and here's what they said about us, and here are their phone numbers.
that's right. No, it's even down to having a designer design the format for our LOI, Mark. I mean, even before we had identified a deal, we said, let's get our LOI ready to go, looking good. And we drafted the terms and the language with our attorney, but we shot them over to a designer just to make it look really nice.
That's like
easy
the
to
best
read and
investment
organized.
I think we ever made with that.
Yeah.
Well, this is like a really good looking LOI, right?
Yeah. And it's not overly fancy. It's just easy to read, because everything's
Simple.
in a box. The terms are clear. You can say, okay, closing, here's the terms. Like, it just makes it just, your eyes are drawn to it. And, I'm sure there's a lot of folks that are just drafting them on Microsoft Word, and, in 5 minutes and shooting them out the door. Right. We take a little extra time with it. And so it's just all these little details add up to a big whole. And, for me, Mark, I'm a big believer. You are too, of course, but the small details matter, right? You said earlier, spelling correctly, make sure their name is spelled correctly. You got their office address correct, all these little things. And, it's something where, when we craft an LOI and cover letter, we send it out to the entire investor committee. So everybody's scanning it and reading through it, just to make sure there's nothing we miss. Cause sometimes, humans make mistakes, but also, hey, what if we mention this, or don't forget this component of the business plan? Or, Joe might say, I know this broker, this is really going to resonate with them if we include this component, right? So it's not just me drafting it and sending it off. There's a team of us looking at this just to make sure it's tight and clean and exactly what we wanted to present to the broker and the seller there.
Yeah. And speaking straight, don't bullshit. Like, we'll call it for what it is. If they start smelling that you're not telling the truth, or you're speaking in circles, like, they'll smell it in 3 seconds. The broker will smell it. And definitely, when you do your best and final, when you have that buyer interview, generally the seller will come on as well, and they'll hear that. And so they want straightforward, honorable buyers. And so if they start to smell that, one, you're talking negative about other people, that's a big, big no-no. And then also, two, you're not speaking straight. That to me is like, you might as well just kiss that offer goodbye, because they're going into a relation. They're basically, you're asking them to marry you.
Mm-hmm.
You're selling a $30 million building, and it can be your baby. In a lot of cases, it's not. It's a property. But we have some deals that we're going in, and they've owned these properties for like 20 plus years, sometimes longer, right? And so when they're interviewing you, they want to know who's buying the property, and that you're honorable. And moving forward, if there is a hiccup, that they're not going to have to chase you, one, for communication. So your responsiveness is there. But if you say something, you're going to actually follow through on that. And I think that is of untold importance.
Yeah, and I think most people intuitively understand how somebody does one thing is how they do everything. So if on the front end you're very proactive with your communication, you have a very clean offer with no fluff, straightforward. It's almost like, think about it like the USA Today. In other words, like, write it at a third grade reading level. Don't put in a bunch of fancy jargon. Just keep it real simple. And that is going to communicate that that's what they can expect when we go under contract. That they're going to be communicative, they're going to be clear, they're going to be straight, and there's not going to be any BS or fluff, right? And it's important that you actually honor that, and that's how you perform once you go under contract. But these little subtle cues we give off to each other when we're building relationships, right? They all are clocked. And so if you're very communicative on the front end, then the broker's subconscious is going to think that's going to be what I'm going to experience on the back end. And the reality is, Mark, is that some brokers are less communicative, and so that doesn't mean we get to take a step back either. We still have to
That's
move forward
true.
with our communication.
We've had
right?
that before, right?
Yeah.
Where like, and John, you've been great with this. It's like the other brokers just you got to, like, it's like pulling teeth, but
Yeah.
you just got to keep on loving on them and being great. And you can imagine if another buyer that you're competing against doesn't have that same, we'll say, forgiveness for the broker,
Mm-hmm.
and they start treating them poorly, or they start yelling at them, worse, they start yelling at them, horrible idea,
Okay.
then
Yeah.
all of a sudden we're there and we keep on loving, and they've turned, and it's like, hey, okay, you get the deal now. And so that's a big one, is that's actually an opportunity, because that can really set you apart if you keep on loving on the broker and you keep on being proactive with your communication, regardless of how they're treating you. That to me is a major, it gives you a major advantage moving forward if you can hold your cool, be patient, and just keep on loving them, because the deal is the most important thing, right? That's above your ego in all cases.
Yeah, yeah. One of our fundamentals is to treat everybody with empathy and kindness. And we sort of define that we don't always know what's going on with the other person in their life, right? And often when you experience that, let's just say maybe a broker's a little elevated about something and maybe their voice gets raised a little bit. If you match that, it's just going to escalate. But if you actually come at them with a softer approach and an understanding approach, and a solution oriented approach. I can think back to deals I did as residential, one in particular where the chimney was like about to fall off the side of the house, and the broker called me just screaming and yelling, like, how dare you guys not disclose this? And the seller hadn't lived in the home for 6 months. It was during the Great Recession. They had a job transfer. It was just the whole thing. And I said, hey, look, I'm not aware of this, but I tell you what, I'm going to have a structural engineer come out, and why don't the three of us meet out there? If you want your buyer to come along, they can come too. We'll just take a look at this together. And bottom line, I'll cut a long story short, but we closed. And at the closing, she said, I basically had that one deal under contract. And if I lost that deal, I was going to be able to make my mortgage payment. So I just appreciate how kind you were during that. And we navigated, and we're sitting here at this closing. It was like a $1 million+ home. And, I could have gone toe to toe with her and told her to pound sand and how dare you accuse us of this, that, or the other thing. But at the end of the day, I'm protecting my interest and my seller's interest, and that's getting a closing. So you can abuse me all you want. I'm going to still come at you with a kind, soft approach. How do we get this done? What's the solution here? So yeah, it's critical,
Yeah, for sure. And I've gone both ways, selling thousands of properties. I've gone both ways on this. I've gone the path that I know works better
Yeah.
now.
Yeah. Yeah.
And then I've gone the other way where I was, the broker said something, and I just lit up, just went off
Yeah.
on them.
Yeah.
And it just never ended well. It just,
Yeah.
no matter what I did on that, it just never ended well. Now, the one thing that's really important with this is that if we see that we're not being respected, that's a completely different conversation when we see we're not being respected. And so this is where we're coming from, a place that is a humble confidence is probably the best way of putting this, is that if we see that somebody is maybe not being straight with us, we will call them out and be very direct. Still coming, it's like a tough love position. We're not trying to teach them anything, but just letting them know that this isn't how we work.
Right.
And so
Right.
that's really important as well, that we're navigating coming from a place of love, but sometimes it is tough love as well, because you got to teach people how to treat you. And so we're not like these little puppies that we're going around that, you can kick to the side. It's like, oh, no problem. You keep on kicking me. That's fine. That's not what we're talking about. We're talking about, say a broker does not get back to you within a timely fashion. We're not trying to
Yeah,
teach them a lesson, especially when we're competing.
that's right.
But we are being, we'll say, persistent and timely with our response back, and we can still ask questions like, as just give us a approximate time frame that when should we expect a response back, so we can be proactive with that. But we're not trying to teach them a lesson per se, because you start going down that pathway, that just nobody likes that, especially if they're a professional broker and they're dealing with these tens of millions of dollars of real estate sales. You want to make sure that you're respectful, yet you're not a pushover.
100%. Yeah, it's not unlike with your kids, right? Like, at least in my experience, Mark, I'd be lying if I said I never rose my voice with my kids, but I really sincerely try not to. And early days of my parenthood, I have a 20-year-old, so him and I have a great relationship, but, I think he maybe got it a little tougher than some of the younger, but I've learned, the softer approach, it's just like, I'm
Yeah.
not mad, I'm just disappointed, often gets better results. Right. And so, I would not say I'm treating these brokers when those situations occur like a kid, but it is that approach of, you can still express your point of view and say, this is not okay, but in a calm, measured fashion. And I think it's heard better that way. When you raise your voices, it just, once again, everything escalates. And now it's like an ego thing versus like, let's just drop the egos here. Like, I want to close. I know you want to close. What you're doing right now, it candidly feels like it's actually harming that process. So what can we do here to get back on track? Right. And ask them the question, put it on them. And so, early on, we had a deal where, it was really on the seller, but they just were dragging their feet on making a decision. And it felt like they were trying to, leverage us in terms of getting a higher offer. Right. And, just kind of, it didn't feel like it was an organic thing. It was a strategy decision. And so we went back and forth. Do we proactively raise our offer, or do we wait and see how it plays out? And, at the end of the day, we just stayed in contact with the broker. We weren't, pushy, but we're like, we need an answer. We have another deal we're circling. And it all worked out. But, those situations do occur. My friend who's a broker, is a top broker in Florida, and he calls it getting brokered, right? There are some brokers that will sometimes fluff a little bit. And, so that also goes back to knowing what your no-go is, right? Like when it comes to an offer, like being very clear that we want this deal, but this is about as comfortable as we are. We really want to make it work, but you're not going to bully us or push us around here either. But it just goes back to, it's on that approach. And when you have that thick ice you described, then you can have those conversations a lot easier because we know each other. We built a relationship. It's not like some stranger I'm talking to the first time and then we're all of a sudden in a conflict, right? So yeah, it's critical. It always starts with those relationships.
Mm-hmm. Yeah, right on. So if we were to look at, okay, what else is important? Definitely making sure that you have the funds to close. That's going to be really important, that
Right.
you have confidence in, okay, where are you getting your funds in regards to, okay, here's the earnest money, it's ready to go. Here's where I'm getting the capital from. And so you need to build in still confidence from that side of it as well. And so they're going to ask you that at the time where you have your final buyer interview. And it's so interesting because in the residential and the smaller single family stuff, this would never happen. But in general, what happens in these larger multifamily space, not every time, but a lot of times you'll have your preliminary offers where you could have 20, 30 offers. And then they take it down to best and final, where you could have, maybe 3 to 5, John, in that range.
Generally, that's right. Yep.
Yeah. And then if you make it past there, they'll say, okay, now we're moving you on to the buyer interview conversation. And they might get you and maybe a couple of others. And then you actually jump on the call with the seller and the broker and then the buyer.
Yeah.
And, you got your teams on the call and they're asking you those questions. And so you got to be ready for that. And so everything that we just talked about, like for us, just before answering any questions, we want to know a little bit about the seller on that phone call. And so that many times you'll skip that step, but building rapport at the beginning of any conversation it's proven to have better overall results. And if you can change your mindset from I'm going to win and you're going to lose to how do we structure this as a win-win deal?
Mm-hmm.
And so your top dollar might be X, and there's the sellers is Y, but maybe you can give them something else that is not valuable to you at all. Maybe closing date is irrelevant to you, but for them it's really important. So you get your price they get their closing date. And so when you're coming beside them, they'll feel that as well in the negotiation versus I'm going to win, you're going to lose. Because in that case, people are clinched up. They're going to want to win as well. And so they're not going to be as giving compared to you coming beside them.
That's right. Yeah. And, I think it's the ability to back everything up with data, right? So whether it's in that seller interview or, the buyer interview, I should say, with the seller or talking with the broker, you should be able to clearly articulate why you've offered what you've offered, right? And so one thing we do is when we talk to brokers and, we're getting a sense of not only, the deal we're working on, but we're also getting a sense of what else they've been up to. Have they had other closings, right? Just an opportunity to congratulate them and celebrate a win that they may have had recently. But you're getting intel. And, for example, we were talking to a broker in the Carolinas recently, and they're like, man, when we get a value add asset built in the 90s, we're getting 100 plus offers, right? And so that's good intel we can keep in mind when we find a deal like that, just knowing there's going to be a lot of competition. But when we submit our offers, we have our underwriting. Now, we don't share our model, but prior to submitting the LOI, we're calling the broker and saying, hey, this thing is penciling out. And in some cases, the deal pencils out right at guidance pricing. And, it's great. The deal works and we're excited. But in some cases, maybe their debt's such that they're looking for a little bit more than the market, at least from our perspective, is going to bear. And so we don't just throw out a lowball number, because going back to that example, those 100 offers, what that broker also told me is 70-80% of them were lowball offers. They really had no communication with the buyer prior to seeing the offer. And so those just get pushed into a trash can, basically. I mean, it's just, it's just like, get them off the table, right? Where if I were to call and say, hey, you're saying it's $190 a door, but we're really, we've sharpened our pencils. We're getting aggressive here, and we're coming at like 175, 178 a door. Sometimes they're like, man, this seller's really needs that price. They're in a situation where they can't accept less, and that's okay. We might still submit it and just see what happens. But often what happens is say, you know what, we've actually been getting feedback like that from other buyers, right? Go ahead and submit. And so, just being able to back up what you're talking about, and having an open conversation around these issues, or, once again, if there's a pricing discrepancy from what they're offering and what we're penciling the deal out to. So, data is king, right? Data doesn't lie. And so there are times where, we'll even submit the comps we're reviewing and saying, hey, this is what we toured. This is what we're seeing. Are we missing something? And it hasn't really happened, but it could happen. Maybe they say, well, did you see this one? Right. And you're like, oh, we missed that one. Maybe we can go back and refine. So it is about a win-win. Let's work together on this. Right.
Yeah. Really good. Open conversation. That's really good. I don't know what it is, John. I think maybe it's like a fear of picking up the phone and having the conversation. I think in a lot of cases, if you were to go right down to the core as to why more communication doesn't happen, I think fear for some would be there. Maybe it's the laziness. It's a high leverage point. I mean, building that relationship, finding it. Just think if there's an extra comp that you didn't factor in, or maybe they have an insurance that's happened in the past. It's like, hey, why don't you go talk to this insurance broker? I heard good things. Like, just having those conversations go a long way, and so then you can restructure the deal. Now,
and Mark, just to pause on that real quick, you're dead on. In fact, our current insurance broker was exactly from that situation. We had a broker, and it was on our first deal, and we were getting a pretty high quote. And we did check with multiple brokers, but when I say brokers, insurance brokers, well, the seller's broker, the real estate broker, said, you got to talk to Micah. He's the best. And so we gave him a buzz, and before you knew it, we had shaved $400 off of our quotes. And we had 3 quotes, but he came in much lower. And
$400 per unit.
Per unit. And we got it a much better coverage at that lower cost. And what we learned was Micah was willing to do the harder thing, which was get us qualified for a state level program that Florida offered, that the other brokers just didn't want to deal with because it was a hassle. But Micah's a hard worker and he's a long-term thinker. So he's like, let's put this extra effort in. I'm going to get these guys a really great quote. And now he's our insurance broker. So you're dead on, man. You never know what could come out of these conversations.
Just for context there, for that one connection, that's $40,400 at a 100-unit building. This is a 100-unit building.
Yeah.
At $40,000 a year at a 5 cap is $800,000 in additional value. by
Yeah.
by that one conversation, that one introduction, by that one
Right.
phone call. And so we're talking big money. Like this is huge.
Yeah, you said fear. I think ego is also a factor with some folks. They're just like, we're deal makers. Like, just send it over. They should know
I
who
got my
we are.
guy. I'm not. Yeah, yeah. I got my
Yeah,
guy. I'm not talking to anybody else. It's like,
yeah,
hey, we'll
yeah,
talk. If one phone call and one introduction, and if we go with somebody else, it's going to
yeah.
save and make us an extra $800,000. I That's pretty good. I'll take that phone call. Would you,
All day
John? I
long,
think you would
all
too.
day long, all
I
day
think most
long. Yeah.
people would.
I've been trying to dissolve my ego as much as possible as I've gotten older, Mark, right? And I think Patrick Lencioni's book, Getting Naked, is a good one. If you haven't read that, listeners, it just talks a lot about vulnerability and doing the thing that nobody else wants to do, right? And I think I've taken a lot from that one.
That's a big one that you and I both are like, oh, you know what? I think you're right on this. It's like, yeah, okay, that's good because parking the ego and it's like, okay, the overall mission is more important. So that's really good conversation there. Now, moving forward, what else can you do to, we'll say, improve your offer? And a big one is your earnest money, or in other words, your deposit that you put down when you come to an agreement in regards to the agreement of purchase and sale. And so, John, looking back on this, you can put it in, and it's basically if the during your contingency period while you're doing all your due diligence, if it doesn't come together, you can get your deposit back. That's one way of structuring it, or you can go hard on that money as soon as you give it, and if the due diligence doesn't work out, you lose it. And so that actually it means that you're more committed to the deal if you go hard on your deposit or your earnest money from day one. And
Yeah.
so, John, looking back on, that's why your pre due diligence is so important when you do something like that. Because if you do something like that, it actually gives you a massive advantage over the other offers.
That's right.
And John, so I remember last year, I mean, it was about 700 grand in hard money out. And if we
Hmm.
didn't close on these deals, we were going to lose that. And
Yeah.
so you better believe we were committed to following through and doing a good job on it. And so at the same time, we never want to put ourselves into a position of having to close on something that maybe was a lemon.
Yeah.
So going and doing our pre due diligence ahead of time was a big part in giving us confidence to say, yeah, we're going to go hard with our earnest money.
Yeah, and that's where for us it's including those initial walks, our property management teams there, our construction managers there. So they're helping us along that way so we don't make a mistake. But there's certain market cycles, Mark, where the sellers demand that, and right now isn't necessarily one of those market cycles. And so a lot of buyers are out there and would argue, well, why not? Why do it? Nobody else is. But it just gives you that edge. And so how we've typically structured it is we put a deposit down on the front end, and then we'll do an additional one after due diligence. So, there is still money on the line, to be very clear, a very meaningful amount of money. But, it's almost like what I would call a force multiplier, in the sense that you just said it, that like now that that's out there, like we have got to perform, right? And so it just the team has to come together and make it happen, and check every box with our due diligence, check every box with the lender, the insurance, and just make sure everything goes swimmingly so we close on time and don't put that earnest money at risk. So it's actually a mechanism that we utilize to benefit us as well. And obviously the seller likes it because it gives them that certainty. And when you structure it that way, what you've really done is sort of created an option contract. You're saying, look, we're going to ask you to take your property off the market for 30 or 45
Right.
days while we do our research. We're effectively going to pay you for that if something would go wrong. And what seller is going to turn that down? If you have two like kind offers, or candidly, even ours might be a couple 100,000 lower, that certainty, that's what we're talking about at the top of the call, is going to push yours over the edge. And we've had it happen where the broker calls and says, man, your offer is a little bit lower. It's actually about 250,000 lower, but with that earnest money, if you can get up 50,000, I think I can get this done. And so now we've got a $200,000 savings just because we did more work on the front end to ensure we were making a good decision, and we could take that calculated risk, so to speak, with that hard earnest money.
That's gold right there, John. That piece of advice is gold for people on how to give yourself a competitive advantage. Another thing you can do is actually condense your due diligence period. And so in general, when you're going and you're buying these larger assets, you want to make sure to do all your due diligence. So make sure that you scope all your plumbing. You want to make sure that you're walking the property and you have your contractor that is basically they're the specialists across the board. We're bringing those people in and we're going through that. And then we're doing the financial audits as well on all the leases and the P&Ls. And so for us, if we wanted to strengthen our offer, we can condense that period down. And so by condensing it down, say from like 60 days to like 45 to 30 days, it actually makes your offer a lot better. And so your due diligence phase and then your closing as well. That's another big one. Now, for us, when we go and wrap up a property, we'll wrap it up and then we'll actually start collecting our investors' funds. And so for us, having these conversations ahead of time is a really important part to know that our investors are ready to fund our deals. And whenever we offer on a property, we're very confident that we're going to be able to submit, and we're confident enough to be able to put $500,000 down in hard earnest money. But if you tighten your due diligence period, that's another way you can structure to be able to be a stronger offer, especially if the sellers will say their needs and wants are a quicker closing date.
Yeah, and that's where it's really important that you have a process for your due diligence, that you're not just winging it. So we have a checklist that every team member reviews on a daily basis. When we, really submit our LOI, that process begins. We operate under the assumption we're going to win the deal. So we start getting our ducks in a row such that when we get that signed LOI back, we generally have a week or two to get the PSA negotiated. So we're getting ahead as far as possible because the earnest money doesn't go hard until that PSA gets signed. And so that's kind of the thing where you can actually get a head start and start getting on site, doing some analysis. And so, that's once again, that thing. And that allows us to shrink that due diligence because we know on day one, this needs to happen, day two, this needs to happen, day three. And generally, we're actually wrapping up, a week or so early. Now, we don't say we're done yet because things may come up, but it just that idea we can usually even get it done faster than we're putting in the contract. And, I would say, the due diligence is important. All those things you mentioned. Closing timelines is something we sort of touched on, but, a lot of people come in assuming the seller wants a fast closing, but there could be circumstances where, gosh, they actually have another closing and it's not until X amount of days out, and they would actually love a longer close period, and so just don't assume that what is important to you is important to them. And so even saying to the broker, hey, if there's something that comes up with the seller and they need a little more time, just feel free to ask and we'll have a conversation around it. We're not committing to anything. But speed is not always king, right? Sometimes a little bit of a more measured process could be more advantageous. Maybe there's a tax concern on their mind. They want to close before a certain date or after a certain date to minimize taxes. So, we had an example where we offered on a property and it was toward the end of the year, and the seller actually wanted to push it into the following year because they had other closings that year. And so they were thinking about taxes. And so, it's just, you just never know what's on the person's mind. So closing timelines, you need to be not necessarily flexible because obviously we have goals and we have things we need to accomplish, but just having that conversation around those closing timelines is another thing that we always do just to make sure we're aligning with what the seller's needs are while also meeting our needs.
For sure. And then being aware that if you go back after you do your due diligence and you ask for these massive retrades or price reductions, if you go and do that and maybe they're unreasonable, just know that future deals, when you submit your offer, their entire company is going to know about that.
Yeah, that's
Like
right.
these brokers, they talk amongst themselves.
Yeah.
And so this is where it's so important that you do your due diligence up front. So you're not having to go back after and doing any sort of retrading at that point. So at the end of the deal, you can get another referral, another reference from that broker saying, you know what, you actually did what you said you were going to do. It's really important during that time frame. Now, you should never close on a deal when you have this big thing that came up that you didn't factor into your underwriting. So we're very proactive with that, with doing our due diligence and getting our general contractor out there who has an eye right across the board for all the major pieces. And we also buffer up the amount of equity that we raise at the beginning to when we do our underwriting to make sure if something does come up, it's factored in and it's not like, oh, that's going to affect the returns for our investors as well. So that's really important.
Yeah. Yeah. Great example of that is in Florida, and really Charleston, a lot of the markets we buy in, HVAC, the condensers there. So, we talk to the maintenance tech during due diligence. And then if we find out that, oh gosh, every summer I'm repairing a lot of these condensers, it's like, well, let's just go ahead and budget to replace, 60% of them. And we may not have to do that, but the money's there should we do it. And when we talk to brokers, even before, I mean, when we're like just building a relationship and getting to know each other, but certainly at the time of LOI, we communicate to them that our commitment is we will not retrade unless it's something that you didn't know about, seller didn't know about, and we couldn't have seen. So if during the due diligence we miss something, we haven't had it happen yet, but if it's a true deal killer, we'll have to cross that bridge. But normally it's things, to your point, that we can absorb in. So our Largo deal I'll use as an example, where we had, for example, allocated $125,000 for landscaping and a few other things. I mentioned the condensers on the HVAC. Well, we came to find out during due diligence that the reason the irrigation system wasn't working was actually an issue with the well. The well had gone dry, so we had to dig a new well. And so, yeah, we could have pushed back and tried to get a couple bucks for that. But we looked at it and we said, okay, well, we have the money in the budget to do it. We got a hard landscaping quote in during due diligence that we really liked. We got a few, of course, but the one we really liked was actually about 85. We saved a little bit of money over here. And so that $20,000 well expense is just something we absorbed. And what we were thinking about was, yeah, rightfully, we could have pushed back on that and gotten that $20,000 savings, but that may cost us a future deal with that broker in year or 2 years from now, right? And so is that worth it when we have the money in the capital budget to complete it? And so it's a decision you have to make on a one-off basis. But, if, for example, we were doing due diligence and realized there was major foundation issues that were not disclosed and it's going to cost hundreds of thousands of dollars, we're having that conversation, to be very clear. But if it's just something minor, you've used this example before, but these are real examples. Now, these are examples brokers have shared with us, to be clear, where, a limb is on a tree is sort of hanging over a roof, and then the buyer uses that to ask for a $250,000 discount on the deal, versus just saying, well, I'll just have a tree trimmer come out and trim that limb back, right? And
Well,
so
in that case there, that broker specifically said to us, I will never send them another deal.
that's right.
He blatantly just told us that.
Yeah, yeah, yeah.
That's real story.
Yeah, I mean, I guess that's what you say, penny wise, pound foolish. Yeah, you got a few bucks over here, but you cost yourself millions down the line potentially, right? And your investors, more importantly, a lot of money. So, we all are all about our investors and making sure they get the best returns, but that conservative underwriting helps us navigate those issues that are minor in nature that do sometimes show up in due diligence. And it just goes back to, the broker is going to be on our side when maybe, we do have a closing delay or there's something that comes up. They're going to go back to the seller and say, we should really do this because they could have come after you for this, but they didn't. They could have turned this $25,000 issue into a $500,000 issue, but they didn't. So let's work with them on this. So it's about that give and take, those relationships. Going back to that,
for sure. So yeah, to wrap up here, I mean, I think as a last point that I'll add is the proactive communication along the way is of untold importance. So you're negotiating at the beginning, but then even after you get that deal, say accepted, proactively communicating, here's where we're at, here are the dates, here's what's going on, without them having to ask. And that starts early in the process. Hey, we are looking to submit an LOI. We're meeting as a team on this at this date, and we'll have it to you by this time. And then actually doing what you said you were going to do. All of that builds trust and builds that thick ice. And so one of the best examples that I have is that whenever you're buying a home, think of it yourself. So you're buying a property, and the example I'm going to give is our dream home just north of Toronto. I submitted an offer, and the broker it was crazy how long it took. He wasn't getting back to me. The deadline came and went. And I'm thinking to myself, I'm like, inside my mind, I'm like screaming in my head. I'm like, oh, it's like, these guys are playing a game. And my head went to the worst spot.
Yeah.
It went to the worst spot. And so this is me as a buyer. And so the point there is that whenever you're doing a deal, proactive communication would take so much stress off the table. So this broker, for example, even if he had said to me, listen, like I'm going to be meeting on this time and it's actually after your deadline, but this is what's going on. That to me removes stress. And so whenever you're submitting an offer, the same is true on the other side. Now, it may not be as much stress, because if they, especially if it's a bidding war, they're like, oh, I'll just discount you. But the point is giving communication even when there's no update is like such a powerful principle in communicating, rather than, oh, I didn't have any update, so I didn't call you. It's like that's not our approach. Our approach is we're proactively letting you know where we're at, so you don't even need to think about it. If you're thinking about it, then we haven't done a good job on communicating. That's our approach. It's like outstanding communication. That's one of the big things we focus on, especially when it comes down to when you're negotiating deals, because the difference of getting a deal, not getting a deal, it comes down to a game of inches. Going back to that movie, John,
Yeah, that's right.
Any Given Sunday, right?
That's right.
We just talked about this the other week, and John's like, I just watched that. And so that reference is good, because it comes down to a game of inches. And so if you apply all of these insights that John and we talked about today, it will increase, it's going to increase your odds of getting a deal, especially in a multiple offer situation, dramatically. It'll set you apart, because most buyers out there don't even do a fraction of the things that we're talking about right now. So if you want an advantage, definitely apply some of these principles. It'll help you big time.
Yeah, it's about structuring winning deals, right? So remembering price isn't always the key factor, right? So it's not always the highest bidder. It's about those terms, making sure you're communicating with your broker and asking what's important to the seller, and obviously factoring in what's important to you first, but just address those items where you can to position your offer. And then just remember, it's all about that strong reputation. It makes future deals easier and more profitable. So those are some of the key things to remember.
Right on. So guys, again, go to fariscapitalpartners.com and make sure that you sign up to be on the reservation list here for our next opportunity. We are in the process right now of going after, we actually are looking at 2 properties right now. And so by the time this comes out, there could be in full effect. So make sure you reach out, book a call with us, and we'll be more than happy to jump on a call and to find a little bit more about yourself and to see if this would be a great fit. So go to fariscapitalpartners.com and go ahead, make your reservation and book a call with us. And looking forward to having a chat. Well, thanks for listening, guys. If you enjoyed the show, go ahead and subscribe to the channel and share it with other high net worth investors that you think will benefit from it. Thanks for tuning in to the Multifamily Investor Playbook. We love and believe in you guys. Keep dreaming and investing big.